Good morning. This is Andrew from Trend Following Mentor. It's the 27th of December. Just a couple more trading days left in the this year. Always what I look at when I'm trading my stocks is I look at the stock market in general first. I examine what's happening. Actually, I had an email from one of my, I don't know, followers or colleagues, whatever, and they said I'm bearish. Well, I try to weigh out the facts. Because again, I try not to have any opinions. The fact is, first of all, this is an old bull market. Bull markets only have a certain lifespan, as do bear markets, because I'm not a bear also. And then I evaluate where I'm at right in the day. I mean, right now we're in a very seasonal period. That's positive. On the positive side, you can say the advanced declining line is now uptrending, which is a very nice thing to see. Prior to this, it was downtrending, which is a negative. The other thing that you can say on a positive is what you look at is we're above, I use these very simple moving averages. When a 10 is above a 30, the world's beautiful. Hey, this is when you really want to be invested. This is when you can make the most amount of money. These periods like this, or periods like this, or you can just go back many periods. This is a choppy period. It's tough. The other thing to be on the, let's say, on more of the negative side or realistic side is you're having many distribution days. And distribution days signal a top. We're at all-time highs right now. You've had 6 distribution days on the S&P. You've had 5 of them on the NASDAQ. And distribution day is when you have more volume going into selling than buying, basically, or you're churning, or there's negative volume, or the stock, or let's say the stocks are going down on bigger volume. The other thing to keep into mind is that we're almost at, I believe the number is 59.6% bulls versus 14% something on bears. So if everyone is bullish, who's left to buy? So, I mean, that's also a kind of a red flag. And the other red flag, over the last 3 days, I mean, we've had this great run, we had 600 new highs. You don't just keep on going up and up. And the thing that's most troublesome to me, and again, not being bullish, not being bearish, just actually reading what's happening, is this is kind of synonymous to 1998 again with Twitter, where Twitter has basically, you could almost say, close to doubled within a month. And for all those people that are going to chase Twitter because it's the newest, greatest thing, you have to be very careful. Because as much as these things skyrocket, they can fall back down. It's like even when you look at Facebook, even though Facebook was a good trade, in the beginning, well, Facebook didn't really get it, but look at this downturn that Facebook went to. But that created an opportunity for us to buy up in here when it gapped up. It created another opportunity here, basically right across here at about the $55 range. So when you're trading or investing in stocks, both, you want to know where you are in the stock market, and you want to weigh out the facts. And many times, it's a little bit confusing. I might put the stronger bias on the moving averages, but also I'm skeptical of this big move because of the number of distribution days, the percentage of bullish investment advisors, the number of new highs, and also Twitter. But again, that's not stopping me from taking trades. And I'd suggest you have a trading plan. Know exactly what you want to buy, what you want to sell, how much to buy, how much to sell, and when to exit with a profit or a loss. And the idea what you want to do as far as your trading plan is you want to buy the strongest stocks in the strongest sectors when the market is healthy. Thank you. This is Andrew from Trend Following Mentor.